It took me 3 years. 3 years of studying the markets every single day. 3 years of making mistakes. Going through trading book after trading book, through trading course after trading course. And guess what? I have made every single possible mistake. I went from strategy to strategy. I did day trading, swing trading. I traded options, futures, stocks, forex. So in this video, I will tell you, if I could start over again, how could I avoid this and go directly to this? So especially for you, I made a clear 4-week plan that you can download and follow. But before I start with week 1, I want to know if you're serious. So please grab a pen and a paper. No notes on your laptop, no Word document, an actual pen and a piece of paper. Got it? Let's start with week 1 and become brutally honest with yourself. So we will start with a self-assessment test. Because trading requires discipline, patience, risk-taking, and self-learning. So I want that you give yourself a score between 1 and 10 of self-discipline. Got it? Yeah, you probably gave yourself a 7. Congratulations. You cannot give yourself a 7 and it's either 6 or an 8. No 7s here. Do the same for patience, your risk-taking ability and your self-learning ability. Please pause the video. Do the exercise and then we move on. If one of these 4 you give yourself a 6 out of 10, that's great. Because the best part is, from the moment you know your weakness, you can work on that. And I highly recommend you to read one of these 2 books, either Hello Habits from Fumio Sasaki or Atomic Habits from James Clear. These 2 books have helped me tremendously. Now, if you gave yourself an 8 out of 10 out of all of these, I guess what? When I started my trading journey, there was one thing for certain. I would give myself an 8 out of 10 out of all of these subjects. And that was not the damn case. And I can bet you one thing. You probably didn't grab a pen and a paper, right? Because you think, I got it all here. I can just remember it. I can rewatch the video. Especially for you, I have a new category. It's called laziness, and you will get an 8 out of 10 for that as well. Now, grab your pen and paper, or do you want to have the same road as me? It's a 4-week plan, not 3 years, 4 weeks. I want you to write down why do you want to become a trader and what do you expect from it. And this will be very important for moments when it's difficult. When you think, is it still worth it? Why did I start this journey? This is something that you can hold on to. Because one of the things you need is perseverance. Never giving up, always learning, always getting better. Most people give up before they become good. And the line between success and failure is always very thin. Because all the traders who have succeeded, they had a deep-rooted passion in trading. They loved what they were doing. If this is for you, let's get rich quick. I highly doubt that this will work for you. And then you can close the video right here. If you're serious, I got some great news because we can start now with week 1. And that is getting to know the basics. But before I start, it's very good you have a great place to practice. After a long search, I found a great professional platform where you are able to practice for free. And if you're done with practicing, you can also connect your broker with this platform. All you need to do is go to the website of MotiveWave, sign up for the free trial. It's 14 days. And after that, you can just use the community version. All of my settings I did in MotiveWave, you can just download it from my community page and just import it. So you don't have to figure it out how to make it look like this. So let's start with the first chart. There are a lot of different ways to plot information, and I prefer the candlestick chart. So right here you see all candlesticks, and every candle represents 1 day. If it's a red candle, that means the open is here, the close is here, the highest point is the wick, and then the lowest point is the lowest part of the wick. With a green candle is the exact opposite. Open is here, close is here, highest point, lowest point. You also can see the 200 moving day average here. It works as a support or resistance point. More about support or resistance we will have later on. And below you can also see better volume. I use a custom version of better volume. Once again, you can download all my specific indicator settings also in my community. Okay, then we move on to the second chart as a 10-minute chart. That means every candle takes 10 minutes to close. In a 10-minute chart, you see here first on the side a volume profile is a 5-day volume profile. On the bottom, also custom version of better volume. And the last indicator you see, it's VWAP. Now you see also some other random colored lines. Previous day low, the previous day high, pre-market high, and a pre-market low. Then we go to the daily chart. You see here custom version of better volume, Y-Wave, VWAP. On the side here, you see here my depth of market level 2 and time and sales. If there's anything that's not clear right now, don't worry about it. Later on, we will come back to these indicators. Now it's just important to know what they are and have an impression how charts work. For week 1, I will give you a few assignments, but we're building a foundation here. Remember, you clicked on this video and you made it until here. That means you're serious about it. So please take these assignments also very seriously. Don't skip ahead, don't skip weeks. Don't think I can do this. No, start clear. The first thing I want you to do is find a place somewhere in your home where you can be 100% focused. It doesn't need to be a room. It can be a corner. It can be your desk. But on that particular spot, you will not relax. You will not eat. You will not watch movies. The only thing you will do is doing focused work. We are rewiring your brain, your mind, that from now on, at this particular spot, we will be focused. The second thing I want you to do is pick anything you want to improve. It can be waking up early, stop smoking, eating less sugar, start working out. Start doing that now. You have to be consistent in it. For example, your goal is start working out, but if you know you cannot commit yourself to working out a full half hour, work out for 5 minutes. Smoke 3 cigarettes less. Wake up 5 minutes earlier. Right now, I want you to write down one commitment you will do to improve your life. Third, if there's one thing all traders agree on, it is you have to be in the right mindset to make money. We're going to create a routine that brings you there. I do that with breath work. What I want you to do is create a routine for yourself, and you will do that every day before you start preparing for your trading. Now, I highly recommend breathwork. An amazing YouTube channel for breathwork is Sandy. But for you, it can be meditating, sing a song, laugh out loud, whatever it is to get you into the right mindset. And the fourth thing you need to do is set up a paper trading account. I highly recommend you Motivate because it's a professional platform, but it can be any platform you like. You will start trading from this week. You will go to any random number generator and generate a number between 1 and 30. Whatever number it lands on, that is how long you need to wait. If it generates number 27, then you can buy the 27th candle, only the 27th candle. And then you generate again a number between 1 and 30. And whatever number it lands on, and that you can sell it. And if you gave yourself before at least an 8 out of 10 for patience, well, please prove it here. Change it to 60 and let's see how patient you actually are. Now also use this week to get very familiar with this platform. Oh, now I know this is not fun. And I'm not trying to make it fun for you because that is not how you make money in the end. We are getting serious here, but we are building the fundamentals in week 1. If you want to have fun, put your money on the line, go to a casino. If you really want to make it, follow week 1. It's not a lot of dopamine here, and that's exactly what we want. I assume week 1 went flawlessly, but now we're getting ready for week 2. And this week will be all about identifying opportunities in the market. First, we are going to discover what stocks you can trade. Second, I will tell you how to trade them. In our preparation, we always start with the daily chart. What do we want to see in the daily chart? We have to identify the support and the resistance levels. There are 2 different ways of identifying them. The first one is for small cap stocks. That means stocks that have less than 1 billion in market capital. And the second one is for large cap stocks. That means more than 1 billion in market capital. These are the rough rules. It's not an exact science. So for the small cap stocks, that's very easy to find the support and resistance level, because often you see these volume peaks, large wicks, and those will be your support and resistance levels. But the story gets a bit more complicated with large cap stocks to finding these support and resistance levels. Most of the time when there's like a few candles that are consolidating, that's what I want to see, a few candles that are bouncing against the level, and you should be able to get there a nice horizontal line there. What we're trying to do here is identifying the other players in the market. We're not looking at just random charts. Those charts are the emotions of the market. Those are people who are buying and selling. Where did people buy? Where did they sell? And we're going to play on that on a purely technical approach. The stock should be able to at least get to 2R. If you right now do not know what 2R is, no problem, we'll come back to that later. Whatever I do on the daily chart also have to make sense on the 10-minute charts, and also have to make sense on the 1-minute chart. And now we come in the part that most of you are waiting for, the exact setups, when to buy, when to sell. The psychology behind my strategy: I want to buy the strength and short the weakness. I want to discover where would other people short this stock. When I have found a point, then I think, when are they wrong? And from the moment the short sellers are wrong, I buy the stock. And the same idea I do with going short. It's when would the people buy the stocks and when are they wrong? Find a place when they're wrong, then I short the stock. It's the exact opposite as buy low, sell high, but it's rather buy high, sell higher. So when we have identified our levels on the daily chart, the stock should either be trading above the key resistance level or just below it and waiting to break out. We have just two important entry criteria. These are not the only criteria, because when we screen for stocks, we have other criteria, but that is for week 3. This is just the setups. I will just tell you only the setups on the long side. If you want to know how I do the shorts, become part of the community and I will just post everything there. So we have two very clear requirements. First requirement is price. The second requirement is volume. I either want to see a clear consolidation that a price is stuck at the level, or I want to have a clear double top. Double top is a very bearish sign, and from the moment that is there, I call that a key level. So we have 3 entry points: the break entry point, the test entry point, and the follow entry point. When a price comes close to your key level, your first entry point is right when it breaks out. But that can only happen when there is a confirmation on level 2. No confirmation on level 2, don't buy. Now it's very hard to be able to read level 2, and I will not get into that in this video. Then we go to the second entry point. That is when it breaks out with volume. So the volume bar of better volume should be higher than the highest bar of the resistance. The price comes back down. You buy exactly there for a move back up. Otherwise, wave volume has to be higher than the previous highest wave of the resistance. So if it's more volume in this move up, you can also buy that break there. But if it doesn't work, I just stop out. And then the third setup is, it broke out, but you missed the break, you missed the test. It goes all the way up, it comes back down to your key level, and your volume criteria were met, and the price is of course met, then you also can buy it there. So here I have an extra requirement that is possible when it comes all the way down, and my level is at the same place as a VWAP, then I also buy there for a move back up. This particular week we will build on our previous habit of breathwork, meditating, and after that, instead of doing the randomization, we are going to actual trade. If you're part of my community, go to the watch list of the previous day, and if you're not part of my community, just sign up to the scan. You will get a newsletter, the highest moving stocks at the end of the day, and use those as your stock selection. Then you will go in your platform of MotiveWave. Because right now you can backtest. You go to the start of the day and you're just going to follow the stock. You just look at it minute by minute. You see volume change. And when you see a setup appear, your entry point, you will just paper buy it. From the moment it reaches your profit target, you will sell it. And that's what we'll do every day. please beware of the hindsight bias. It's so much easier to trade if you already know what happens. So please, when you set it up, try not to look at the charts, so you have a more objective view of how you would perform. For week 3, the question is, how do you create a plan? That all starts with finding the right stocks to trade. And there are 3 different free screeners you can use. The first one is just a YouTube live stream, Zendo Live Scanner. The other one is TradingView. To make it fast and quick, the settings of the TradingView screener are exactly written here. This is the screener that I use pre-market. This is the screener I use during the market hours. Now there's a few aspects that are in the screeners. For example, relative volume. That means how much volume is there today compared to the volume previously. So with small cap stocks, I want to have a relative volume of at least 5. For larger cap stocks, I can be a bit more flexible. Then there is the float. It's also important for small cap stocks. Floats means how many shares are there available to trade. So low float stocks means there are not a lot of shares available. They have a possibility to squeeze very high, but never trade micro float stocks, so stocks with a float lower than 2 million, because they're way too volatile. The third kind of stocks I'm looking at is on StockTwits. I just look at the top 10 trending stocks, and sometimes there are also some interesting trading opportunities. So from all the stocks you find on the screener, you make a plan out of that. You identify the key levels, you identify the possible setups, you identify what you expect to see, what will you do when you're wrong, where will you get out. Usually a stop loss should be at least 1 to 2 ATR below your entry level. Now, what is an ATR? That is this number, that is this indicator, and it means average true range. How big is the average candle? So imagine your ATR is $1, you risk $1, you should be able to make $2. If that's not possible, I won't put it on my watch list. So basically, you plan your trades and you trade your plan. Then it's just waiting until your setup appears. From the moment your setup appears, you trade your plan. So previous week, you have practiced the setups. And for this week, you're going to plan your trades. You're going to use the screener, get familiar with the screeners, check stocks, look what you want to see. Identify the key levels, what you expect to see, write down what you do when you're wrong, write down what you do when you're right, and then just trade these setups with paper. Now we arrived at week 4, and that is all about the longevity in the market. So we have to start with risk management, because the only way to survive in the market and to make serious cash is if you manage your risk. And the question is, how much should you risk and how much should you trade? Now, if you don't know the amount you should trade, please watch this video and then come back here. And for each trade, you should not risk more than 1% of your account. If you trade with $10,000 for each trade, don't risk more than $100. So right now, we are still trading with paper, but from the moment you move from paper to your full size, it's important to know how many shares can you trade with. And that is why I use the indicator ATR, average true range. So in short, you divide your risk per share by the amount you're willing to risk, and that is the amount of shares you can trade with. If your ATR is $1 and you're planning to risk $100, that means 1 divided by 100 is 100 shares. Then you can buy 100 shares. You will start doing this with paper. So from now on, you are going to calculate your risk and imagine your paper account is your real money. So if you're planning to trade $3,000, don't put $1 million in your paper account. You will trade with $3,000 of paper money. So every trade you risk $30 to make at least $60. Then there's another very important thing you have to do is a max loss for every day. For me, a max loss is 3%. I'm not willing to lose in a single day more than 3% of my account value. And for you, it's important to get a max loss. Another thing that is very important is keep track of your emotions and of your trades. You have to have a trading journal. There is no question about it. There's no debate about it. It doesn't matter how you do it. You can use free websites, paid websites, write it down on paper or Excel, and also write down your emotions. Write down your mental state. Yeah, today I felt sick. Today I was frustrated. Today I was happy. Today, because they also give very crucial information. It is important to understand why you make certain decisions. At the end of every week from now on, you will read your diary. You write down how the week went, tell what went good, what went bad, and what will you do the next week to improve. Will you work on your stop loss? Will you work on your discipline? Will you work on your patience? Will you work on your... And right now, you will start for 3 weeks with paper. That's what you will do. After 3 weeks, if paper goes perfectly, now you just buy 5 shares. 5 shares, not more. You're fake trading with real money. Then you have your winners can be $1, $2, but this is scalable. Does it go for 3 weeks good? Then you can do a little bit bigger risk per trade. Let's say 0.25%. Does that go good for 3 weeks? Then you can start risking more, 0.5%. Does that go incredible for 3 weeks straight? Then you can risk more and start risking 1% a trade. And that is how you start trading. Now keep in mind, I'm a momentum trader, so my specific setup strategies might not be for everyone. The way to approach trading, that is very important that you follow like that. Build a habit, get in the right mindset, prepare your trades, and have amazing risk management. You have to be disciplined and consistent and persistent. It is important to find your voice in the market and to discover what works for you. Especially for that, I made my own trading community. It's called the Trading Tribe. If you wonder what broker you should use, you have to check out this video. You don't make the mistake of choosing the wrong broker. See you.